So we've been talking about some of the things that have crystallised in the last 6 months. Credit to statutory demands that were issued in March, and the end of COVID commercial rent relief. What other things might accountants and directors particularly be looking for?
Well, we've touched on the COVID safe harbour, which has given some protection to directors, but directors certainly should still realise that they have obligations out there external to that. So things like the potential liabilities to the ATO. It's always been the case that you can be potentially liable for the PAYG and the superannuation if your business hasn't paid it. As of 1st of April, GST was added to that list. So directors in certain circumstances can be made personally liable for the company's debts. And that applies if, for example, if you haven't lodged your BASs within 3 months of the due date. So if a business shut down early on in the piece and directors have walked away thinking, well, the business isn't viable going forward, that's me done. If there was outstanding taxes of that nature, then they might still be something that could arise. Obviously, at the moment, the ATO is probably a little bit hands-off, but eventually you would imagine they will go through their data and work out, well, who owes us what, and maybe come knocking.
So do I have to lodge the BAS and pay the BAS?
Well, it really depends on the circumstances, and again, comes back to getting some advice. Certainly, if it's within 3 months of its due date, absolutely, lodging those BAS can eliminate that automatic lockdown personal liability. Certainly, paying the debts that might have arisen from lodgement of those BAS will certainly eliminate your potential personal liability. So it really just depends exactly what your situation is, how old the debts are, what type of debts they are.
So if I stopped trading in April and I'm not going back to that old life, but I've still got that company there, I get my BASs up to date and then look at taking some action before 31st of December. Would that be my best course?
Yeah, absolutely. If there's debts that have accrued during April, for example, they would have been due to be lodged at June, so potentially you've missed out the opportunity to avoid the lockdown provisions there, but you certainly need to know what potential liability you might be exposed to. So what were the amounts that would have been on those returns, and conferring with your accountant really as to what the next step should be in terms of lodgement versus other options that might be available to you.
Yeah, it's a little bit tricky, isn't it, when we're in the middle of regime change. What's going to happen? You've got 31st of December deadlines looming with respect to COVID safe harbour. So you've got to balance that on the one hand with the change that's been announced with respect to the insolvency reforms, where companies will be given till the 31st of March to register an interest in entering into a small business type insolvency area where they might either go into a liquidation or into a voluntary administration. We'll call them that, but they're actually the new regime types. And if you are one of those small businesses that qualify for entry into that area, then you get to utilise the safe harbour, the COVID safe harbour from the previous 12 months. So it's a little bit confusing. So like Bill said, you've got to get advice on it. We really need to have a look at what are your options right now, right today, versus what might be available for you into the new year.